You're watching today's video technical update presented by FXTimes. It is Friday, June 4th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. It is Friday, and as always, I'll take a look at the Japanese yen crosses. The yen has been losing in the last couple of weeks, but this was a correction to the trend of yen strength, which is boosted by risk aversion. This week ended with the yen taking back some of those losses. The question is whether this is a true sign of continuation or just another move within it, chopping up traders attempting to jump on the trend. This video is being produced at about 3 p.m. Eastern Time ahead of the close of this week's trading. Here's a look at the pound-yen pair as we see some topping action and already a strong decline from this 136 area. Okay, so at the moment the market's testing and maybe breaking this rising support. In any case, this is a very strong bearish sign, candlestick action, and also hitting the here 61.8% retracement. And if you extend it further to the full length of this move, it's about 50% retracement. So this was a area of resistance. You see it's also nearing 200 moving average in the 4-hour time frame. So this resistance worked out. We had one attempt, and then this second attempt, this was a continuation, a bearish signal right here, and the market has followed through. The target for a full swing projection that is suggested by this negative reversal is to the 123 area. Okay, looking at the daily, that's you see the swing projection again, this negative reversal, and also the candlestick action here is an engulfing pattern, basically a reversal pattern, and again also pointing to 123. Okay, so that's the pound yen. Here's a look at the euro yen weekly time frame. Here you see the market test and broke below this 114 area and sustaining this break. That's the difference between the euro and the pound yen. The euro, as you can see, is more pressured. Here's the pound yen. It hasn't reached the previous low yet. So back to the euro yen. That's the weekly, very bearish. Looking at the daily, we see that the market has been consolidating, and then today was a very strong bearish attempt, threatening to break below 109. It hasn't, but if it does, and there's a pullback, preferably a pullback that can establish this area as resistance, then we should see further decline. First, though, we want to look at the 4-hour time frame. The first target is in the width of this consolidation zone, which goes down to about 105. So if 109 breaks, 105 is the next target, and then 101.50 is the next one after that. So we'll continue to follow and adjust these outlooks next week. The Aussie slid against the yen this week. Very strong slide, but just as strong as last week's rally, maybe not as much. We see this RSI on the weekly testing 40, but there is a positive reversal, so I'm not very sure if this is going to continue, even though price action is very strong here. There's 3 very strong weeks. Last week was a correction, and then this week looks to continue this decline. Okay, so very bearish, but I'm just a little worried that the market may be supported here. But you know, if you are trying to look for yen strength, you know, euro and pound might be better. Although the commodity currencies have also been hit up in the recent weeks, but I doubt that's gonna last longer than the pressure that's on euro at the moment. That's just my opinion. Now, looking at the technical situation, here the market's still at above 50%. If the market breaks below 92, then we may see further decline. Looking at the daily, you see here this market consolidated, jumped up, consolidated. Looks like this is topping, and we might continue lower. RSI's breaking down below 40, couldn't even reach 50. So very bearish in this in the weekly and in the daily. Well, in the weekly, actually, you see that the overall trend since 2009 still has been up. So in the long term here is still up, and yeah, so we should look at the daily for some more detailed look. Here we see very strong move, but really we are still above this previous consolidation zone. You see we have two. See that more clearly in the 4-hour zone. So most we should expect is a near-term or short-term decline towards 72 area. Okay, so 75 breaking, or 75.50 breaking, and they should go to 72. But if 72 breaks, then looking at the weekly, we could go further below to the 68 area. Okay. The Canadian dollar, Japanese yen, also similar case. Here in the weekly, we see this rally, and so since 2009, we're still in an uptrend. Here we have a test of this support level. RSI also testing 40, so very similar to Aussie yen. And we do see that this is 4 weeks of decline, 1 week of correction, and then this week again seems to be an attempt to continue the decline. In the daily, we see this is mainly Friday's move. You see most of the week and the past couple of weeks we've seen this rally, but today's candlestick is very, very bearish. And looking at the 4-hour time frame, we see here if the market breaks continues, it should test the 8250 area, and if 8250 breaks, then looking at the weekly, if maybe we could, so we could go further down to the 7850 area. Okay, so right now, if the current support levels are not holding up, then the market could go to 78.50. But until then, we should respect these support areas, even though the strength of these declines should give us a bias or prepare us for a breakout. So that's the Canadian dollar yen. The US dollar has been holding up against the Japanese yen. It's also benefiting from the recent risk aversion. And you see the dollar yen in the weekly just in a sideways action. The dollar hasn't been gaining much neither when the yen was losing, because also it has the same dynamics with risk sentiment. So this is at the moment more choppy, more ranging than the other yen crosses. Here, so in the weekly, we see the markets in the middle of the zone between 95 and 88. But really there is a here the 94 area also provides some resistance. Okay, so looking at the daily, we see here the market failed to reach even 94. And then today we had an engulfing pattern here. So we do have a negative RSI reversal suggesting a decline further to 88.30, near the 88 support area. In the 4-hour time frame, we see confirmation is needed from a break below this rising trend line, and also here a break below 40 would help as well. At the moment, we may be developing actually a positive reversal here. We're in a channel, so that's a bullish sign here. And if the market is supported here above 91.50, basically this previous high and also this rising trend line, then the market can actually continue further towards the 94 area. Here 93.85. Okay, so market can still rally just below 94 if the market doesn't break this rising support. If it does, look for a mini pullback before the decline towards 88.30. Okay, so those are the two scenarios in the dollar yen. That wraps it up for this week. Visit FXTimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.